I'm Niels Christensen, editor with KITCO News. Welcome to the Minds and Money Online Connect Virtual Mining Conference. Today, I get the pleasure to sit down and talk with one of Canada's top mining executives, Clive Johnson, CEO of B2Gold. Clive, it's a pleasure to talk with you today.
Hi, Niels. Well, thanks for having me on, and I look forward to our chat.
Let's just jump right in. There's so much to talk about. Third quarter earnings, I think, top of my mind. You guys are on track for 1 million ounces. This has been your goal for a while now. Really quickly, what's it been like to try to operate in this new environment as we deal with COVID-19?
Yeah, obviously it's been really challenging, worldwide in every aspect of life. The mining industry is no exception. I think that we've done extremely well. We actually are on guidance for this year. We guided we're right around 1 million ounces for the year, and we guided all sustaining costs of somewhere between $780 and $820 an ounce per ounce, all in costs. So obviously very low cost producer. And despite COVID, we're actually on track to maintain that guidance, to meet that guidance for the year. Had a great first 3 quarters, and it continues into the fourth quarter. So really pleased with that. I think that there's a couple of key reasons, and I think they are really, I would say it's about experience, and it's also about the corporate culture that have helped us so much. And I think the experience factor, there's a group of us who have been with, founded B2Gold about 12, 13 years ago as a private company at zero. So since then, it's been quite an interesting evolution through several countries and several different projects, and building up where we are today, and much more to come in terms of the production side. But we learned a lot along the way. If you go before B2, it was B2Gold for years. I was one of the founders of B2Gold, and we built BMA over 35 years from an exploration consulting company, contracting company, to a successful intermediate producer. We were in Russia, we were in Chile, we were in South Africa. We learned a lot, and so if you go through the history of BMA and B2, you see a lot of experience. We're very good at managing various forms of challenges or crises. When you do some work we've done in Chile and Russia and all these other countries in the world since we've done B2, you face lots of challenges. So the experience of our group is extraordinary. There's some crazy number about our executive team. If you add all the experience together, it's around some silly number like 300 years. And it's not just 300 years of experience in the industry. That's 300 years of working together, actually, whether it be our B2Gold. So, and that team has just grown year after year. I'm just so pleased with I think we seem to be a good company to work for, people like working for us. So the experience factor has been huge. So we've dealt with every kind of crisis imaginable throughout with those years. So I think we have a great experience at managing crisis. And what have we learned from all that? We learned that, the people on site are absolutely critical. You can't run mines from Vancouver, and I've always said that. So we've always emphasized the people and training people and having great local management. And really, it's about the whole team mentality and concept, which is what, you and I were talking about rugby a little earlier. It's really what B2Gold and BMO were all about, that true, you can't fake that. If you're going to talk team, you got to walk the talk. And I think we've always tried to do that. So that segues nicely into the second reason why we've done so well during COVID. And that's been our culture. The corporate culture of being on B2Gold was all about fairness, respect, and transparency, and kind of being accountable. Those are big words, but we've really tried to live that every day around the world, from the BMA days into the B2 days. And that's it. We don't use a lot of contractors or consultants because we want accountability. We want to be responsible for our workers. So we have 4,300 employees around the world now, and tremendous relationships with them. So that culture, which I like to feel is an extension of the Canadian culture. We're a very proud Canadian-based company, but with incredible, obviously a hugely diversified workforce all over the world. But I think that the key to that culture is by treating people this way and being respectful, you earn a lot of trust. And this is when you hit a crisis, you find out how you're doing with your employees, you find out how you're doing in your business. And it was really great to see. The countries we're in, Namibia, Mali, and the Philippines, they don't have a big safety net. These countries, they can't afford to lose these jobs or these taxes if at all possible. So going into COVID, we all had one thing in common: the company, and our employees, including our unions, and the governments in the countries you work in, both the federal and local level governments. And it was really great to see, because all of us had the same agenda, which was we wanted to continue to mine safely if we could do it safely, and continue mining through COVID. But we didn't have any issues of, what's the company's doing here? What's their real angle? What's their agenda? I really was very rewarding having worked for years on the premise that you need to earn the trust of the people in the countries you're in. It's their country, it's their goal. So you need to earn their trust. That was a novel idea not that long ago in the gold mining industry. So it really feels good for us, and it's been great to be able to keep our employees working, continue to be substantial players in the economy with taxes, etc., and continue all of our great environmental work, our social programs. We just got a reward for sustainability, the top sustainable mining company from Mining Journal, which is very nice to see it recognized. So all of that meant that we were able to respond very quickly to COVID. And every site's different, of course. Every mine's different. Every challenge is different. But we kind of took an island configuration at each site to try and turn the mine into effectively an island, and really control in and out, and really work with the employees. I have to give a huge shout out to all of our incredible executive team and all of our country managers and workers in all these countries. People have been working harder. They haven't been seeing their families as much. It's just been amazing. And every time I'm on a call with the mine, I always ask, one of the questions I always ask is, how's morale? And people are just, it's fantastic. It's so rewarding. And it's really, it's quite heartwarming to see how, if you do treat people well, how that works as a win-win situation. So we've done great. And during that time of COVID, not only did we face all these challenges, getting people in and out, getting supplies in and out, all those things, COVID itself, all those things, and doing extremely well. We also expanded our biggest mine, the Fekola mine in Mali. We did a significant expansion of the mill to increase it by 1.5 million tons a year capacity. So not only did we do that with our own construction team, again, we have this amazing construction team that's built 10 mines now for being in B2Gold, and they finished that, and now I think they're ready to go out to the next one, which we expect will be Colombia. So just tremendous work by so many people, and as I mentioned, but very rewarding, I think, for everybody involved, and another example of why you treat people well.
I was going to say that's a very aspiring message, especially for the mining industry, as we face sort of all of these new challenges when it comes to environmental, social governance, ESG stuff. Sort of wanted to move on and ask you, 1 million ounces, that's been your goal for a while. What gets you to the next 1 million ounces? What gets you to 2 million and really become that a senior gold producer?
Sure. I mean, everyone assumes you've had a goal to be 1 million ounces for a long time. We actually never really did. We started this company, as you heard, 12 or 13 years ago, and the first gold mines were in Nicaragua, which had great success there. And then we went to Philippines, Namibia, and then, of course, on to Mali, and we're exploring in Uzbekistan and Japan and Finland and other interesting places around the world. So we never really, I think the danger in setting those sort of goals are the fact that, you got a goal to get there. So, you do the last deal, which isn't a great deal, to get you to 1 million. So rather than have a goal of 1 million or 2, we just kind of said, hey, we're just going to keep doing what we're doing. We're going to try and find creative projects to acquire on a friendly basis from from successful junior companies, which we've done, and we're going to use our great exploration team to continue to find more gold. And so we've done that, obviously, from 0 ounces to 1 million a year, extremely well. But there was never a set number and a goal, as there isn't now at the end of the day, because I think those things are a little bit dangerous to put those arbitrary numbers on it. Suffice to say, we're not going to stop now. At the end of the day, we've just come up with 5-year guidance, which is quite a lengthy guidance for a public gold mining company, But we listened to our shareholders. That's what they wanted to see. So we're now looking at 5 years, feeling very comfortable with that, given our life of mine plans. The mines all go on well beyond 5, but we just came out and said, here's 5 years. So we're looking at around that 1 million ounce a year mark, somewhere around that mark for the next 5 years, as a minimum, with the 3 mines at around $800 on sustaining costs. One of the lowest cost gold producers in the world. We're now debt free, so which is pretty remarkable as well. So we're there. So we're not going to stop here by any means. And I think we have the luxury, or not the luxury, we've earned it, which is we have done the heavy lifting and did a lot of M&A work when other companies weren't doing it and building mines. When gold mines were so unpopular to build gold mines for most of the last 10 or 15 years, because it was really contrarian, because the industry had made such a screw up in so many gold projects, as we all know. I'm glad to see the industry's gotten a lot better, and it needed to. So I think that we were prepared to be contrarian. We've done it before. Russia in 1998 with gold at 300. We've done some contrarian things during our careers. I call them measured risks, and we've got them right so far. So the idea. So now we've ended up with this significant group of assets, 3 in production, with lots of it further upside of those 3 mines, but also what we see in our pipeline with Gramalote in Colombia and KITCO in Burkina Faso as well. So we're looking at the pipeline saying, well, our job is to get value for our shareholders for the assets that we have, first and foremost. So we're really focused on growing with the pipeline. We just expanded the mill, as I mentioned, at Fekola. So now it went from 450,000 ounces, 460 last year to over 600,000 ounces this year, and onward will be averaging around that 550 to 600,000 ounces, at least, as I said, that that 5-year period. So around Fekola itself, there's great upside. The reason we expanded the mill is we've had such great exploration success. So with the Fekola deposit itself remains open. We haven't limited. I think the pit will get larger still beyond the 10 years we're talking about. And then we also will end up probably underground at Fekola. Right next door is Cardinal, a new discovery, which we think is probably going to be around somewhere potentially 1 million ounces, but good grade material 500 meters away from the mill. So there's another source within a year we could be actually adding some Cardinal ore, good grade ore, through the Fekola mill, which seems to have extra capacity. Now that's not to try and maintain that guidance for 5 years. That's above and beyond that. Similarly, at the Anaconda, which is 20 kilometers north of Fekola, we always knew there was great exploration targets there. Papillon, the previous owner, did a great job of outlining targets. So there we have it's going to be around 1 million ounces plus of weathered material near surface, we've had one resource out. We're updating that. That's attractive because it's very cheap to mine that. So you could potentially haul some of that down to the Fekola mill with extra capacity as well. Beyond that, we think there's the potential for another multi-million ounce discovery at Anaconda as we get below this weathered cap at 50 meters to get into the sulfides. Recently, we've seen some really good drill results, not that different from the early days of Fekola. So there's the excitement there. So that's immediate sort of grassroots, brownfields kind of exploration, as we like to talk about it. And then beyond that, Gramalote is going to have a feasibility study by the end of the first quarter of next year. It's our joint venture 50-50 with AngloGold Ashanti. We've become the manager of the operation. AGA wanted us to build it with our construction team, which was a nice compliment from them. We work very well together as a joint venture. They've done some great work there. So now we've got a permit. We have coming up on a final feasibility study by the end of the first quarter next year. It looks like it's going to be a very good mine from everything we see. We've got a bit more work to do. We just did infill drilling. Geologic resources coming out soon, and that will go into the final feasibility. Barring any surprises, which we're just not seeing at all, it looks like a very good, potentially low-cost gold producer that could produce over 400,000 ounces a year, split between our partners, AGA and ourselves. So the idea would be to move to the feasibility, as I said, in the first quarter, a development decision at that time or very shortly thereafter, get on with it. We have a permit. A very supportive government in Colombia, locally and federally. Great time to be where we are in Colombia with a good partner. So that one can add a lot of value. Of course, we already own our 50%. So that's when we can clearly finance some cash flow. We're looking at 900 million this year alone in cash from operations to B2Gold.
Sorry, I just wanted to say, your third quarter earnings, record profits. It sounds like do you put that money back into the ground? How do you spend that money?
Right. I saw that was one of the additional question you were going to ask. That's a very germane question these days, of course. And a lot of companies are in this great position. And, as I said, I've been known to be a critic of the industry, but I always think that's been telling the truth. We needed to do better, and I think we are doing better in a lot of companies. We still need less gold mining companies that are better run, and we're actually starting to see that. So what do you do with this bounty after all these years of hoping to get to this point? The goal was to try and get to the point where you're debt-free or minimal debt, and you can take your cash from operations, and you can use it for two things. One, you can take some of your free cash flow and reward the shareholders. So we have one of the highest paying dividends in the sector. We had the highest until Newmont upgraded theirs. So we're paying out around 16 cents a year to our shareholders in a dividend. And that's great. We just started the dividend a year ago, and we've doubled it already twice. So that's great to be there. But we also that's part of the strategy. The rest of the strategy is to be in a position, if you don't want to go back into the debt markets or equity markets, to use your cash from operations, your cash flow, to build additional mines. So if you look at 900 million this year, and it'll be similar if the gold price is the same the next couple of years. So to build something like Gramalote, which is probably 900 million of capital costs, 100%, so 50 to us, 150 million would be mobile fleet, so you pay over 5 years potentially for that. So you're really talking about 750 million or half of that to our account. Well, generating 900 million in cash from operations this year and projected to be similar next year and the next year, etc. Clearly, we can continue to pay a healthy dividend, and maybe even could look at the dividend middle of next year when we understand the capital requirements of Gramalote, and continue and build Gramalote without going to the debt markets or the equity markets. So that's a great position to be in, and that's the balance. So we haven't gone to what a lot of other companies today, and it makes some sense, has gone to a sort of a ratio of free cash flow, a percentage of free cash flow going to dividend. We haven't done it yet just because we're looking at the Gramalote saying, let's nail that down. I don't have any indicated numbers going to be different from what I've talked about, but we need to update them. But that's the plan. And then when you look beyond that, we talked about the pipeline, so that's Gramalote. Then you've got all this work we're doing around Fekola, not only to improve the production over the next 5 years, even potentially, but above and beyond that. If we have another major discovery 20 kilometers away, we could be building another significant mill in the company with potentially another multi-million ounce discovery near Fekola. KITCO is in Burkina Faso. We're doing an updated feasibility study there. That looks more interesting. It's a 4 million ounce potential open pit gold mine that's been on hold, waiting a better gold price or better economics. The gold prices help, but the fuel prices with natural gas could be a game changer there. So we've got a feasibility study we're updating there, and that's one we'll look at. Now that's one where, we'll see what we do with KITCO, but our job is to get value for the assets. So we might look to that one. If it's as good as we think, we might bring another partner in. We can always consider selling the asset. The government of Burkina Faso justifiably is going to expect the mine to be built when it's economic. That's an obligation we should feel to every country we're in. These mines should get built by somebody if they're economic. We may not build it because we will never build two major gold mines at the same time. We have one construction team and they're the best in the world in my view, and many other people's view. So we want to keep them busy on one at a time. So we'll see what we do, and we'll see about sequencing KITCO. But I just pointed it out because it's another significant asset. Beyond that, 60 million this year in exploration, probably 65 million next year. 60% of that is probably what we call brownfields exploration around Fekola and the Philippines. All of our projects have had great exploration success. Namibia, the Philippines, etc. And that I expect to be ongoing, continuing to extend the mine life, of the lengthy mine life that we already have. But in addition to that, we've been known for world-class discoveries in the Beam and B2Gold days. That construction team led by Tom Garrigan, Tom and I worked together since, it's hard to believe, but over 35 years, we were together starting in the Yukon as young lads. At the end of the day, Tom was trying to find mines and I was the line cutter and the claim staker. So that's how far back we go, and it's an amazing team. So we're exploring now. I think I mentioned we're looking for world-class opportunities almost anywhere in the world. And we've done that better than anyone in the world, I believe, if you look at the history of even B2Gold. So we have always been driven by geology, not geography. An important distinction in our history. So we were prepared to consider Russia, do a lot of due diligence, not only on the opportunity, but can you actually get gold out of Russia? Can you get a permit? Can you work with the government? All those things are part of our extensive due diligence. So we're looking at Uzbekistan, we're looking at doing some drilling in Japan, Finland, and there'll be a number of other opportunities we're looking for in Africa and elsewhere. We have the great advantage in being able to be truly global in this business, and we've proven it time and time again. So that's kind of how we see spending the money going forward. Develop the pipeline, great exploration, and also we will look at M&A. But we have the benefit of being ambivalent about that because we did this heavy lifting when others weren't. There are others need to catch up to us now in terms of M&A. We'll look, but it's got to be a special opportunity for us to use our shares to acquire or cash to acquire something.
So we're running out of time here. I just wanted to ask you really quickly. The mining sector as a whole continues to still suffer from valuations. Companies undervalued. How do you get investors back into the marketplace? Especially like you look at third quarter earnings. And this year you've increased your dividend twice now. Companies are cash flow coming out of their ears. How do you get that message out to investors?
Well, I think it's an interesting time right now because of the increase in gold price, you've got the attention just a little bit, but you've got a little bit of attention from some of the generalist funds. You've got a lot of young fund managers who never considered gold in their lives, never considered gold equity in their careers, because they think the gold people are kind of the lunatic fringe of the investment community, and a lot of gold miners are kind of crazy as well. It's a bit of it's not taken. Let's just say it's not taken that seriously in Wall Street, and it hasn't been, and partly for good reason, because of the debacle of the last 15. Too many deals, not everyone. Too many bad deals. Too many crazy acquisitions. Paying way too much. Too many construction failures. Too many failures of running mines. It's no wonder the gold mining sector has been somewhat tragically of the laughing stock of investments for quite a long time. Only buy gold stock if you think gold's going to go way higher. Better still buy gold or the ETF because they can't screw it up. So we've got a lot. We're really behind the eight ball, have been, but we're coming out of that, which I really think we didn't have to learn the hard lessons and change. Fortunately, I think because we did what we did so well, and are so detailed when we need to be, yet entrepreneurial. That's one of the great advantages. But at the end of the day, more companies have done better, and we welcome that. I mean, the last thing I would do is be critical of our industry because it affects all of us. So we've done a better job of that. So so the generalist funds is a great opportunity, but I think you can get in the door with some generalist funds because they're intrigued by gold now. You might get a meeting, you might get one meeting, you might get two. To get them as shareholders and to keep them as shareholders, you got to perform. And that's the interesting, because that's the bottom line for all stakeholders. People talk about social license and stuff these days in all these countries, which is great, and all these fancy titles. We've been doing that for an awfully long time. The same approach you take with the people in the countries you're in and the governments you're in is the same approach you need to take with your shareholders. And that's really fairness, respect, and transparency, and delivering on the promises you make. If you sit down with a leader of a country, as I've done all over the world, and promise him you're going to build a mine in 2.5 years, spend this amount of money, create this amount of jobs, and pay this amount of taxes, they believe you because you're Western. They go, oh, these guys are going to do it. They're a Western company. Unfortunately, when you don't do it, that's what you can get in trouble with governments and with shareholders. So this whole thing, you can get in, as I said, you might get the attention of some generals, which everyone's after, but to keep their attention and earn their credibility and their respect, you got to run it like a business. Mark Bristow and I've had this conversation. You got to he's done a lot of great things. He runs it like a business, first and foremost. We run this and always have run this like a business. You shouldn't buy gold. I don't think you should buy a gold company necessarily because you think gold's going higher. We need to appear to the generalist fund saying, yeah, you can have your gold exposure because we have incredibly leveraged to the gold price. But at the same time, just buy our shares because look at the last 10 years, 12 years, we're up 1,600% over 12 years if you bought our stock back then because of real things, not because of promotion, because of what we've done. So that's the best way to get new investors and keep them, the generalist funds, is to actually continue to prove to them that we're worthy of an investment, not just because we're gold, but we're worthy of investment, and gold should be the gravy on an investment in a gold mining company. That's our argument. It's been our argument for years, and that will continue to be. Puts us in a great shape, and a few other companies, more and more, that are performing well.
Clive, I think that's a fantastic way to end this. I like that message. Treat your shareholders like you would anybody else, and really show them that you can be profitable. Thank you very much for this conversation. This has been fantastic, extremely enjoyable.
Yeah, Niels, thanks so much. Well, I always enjoy chatting with you, and great questions. So we covered a lot of ground. Fortunately, I do speak quite quickly, which has its benefits. We did an hour and 20 minutes, so that's great. Thanks for that.
Excellent.
All right. All the best.
You too.